Hello, trading is closed on April 2, 2019. I apologize if some people get 2 copies of this video, but I got a message the first time I recorded it that there was an error of some kind. I won't have any videos until next week because I have personal business. Yesterday we said the pattern was positive and higher prices should print, which they did immediately. This is the pattern with the early high. Tomorrow should have the early low. We'll discuss the call for tomorrow, which is that this optional target will probably print. We'll then go over the intermediate term, which I think is rather tenuous, and the long term, which I think has improved dramatically. It isn't good to rally all day and not be able to close over these highs. It also isn't good to gap up and not be able to close over the highs. It's a negative pattern. Unless we gap up and take out this high early, lower prices should print tomorrow. MEJT said this rally attempt wouldn't stick, this drop attempt wouldn't stick, and this rally attempt wouldn't stick. We came enough to the target here, so this price doesn't have to print. I'm betting it will. I don't follow DeMark stuff that much anymore, but this was today bar 13 of a sequential sell signal, and it's pretty close to a combo sell signal too. A lot of these haven't worked, but if we start dropping, I would tend to believe it. We also have what we showed yesterday, which was the NASDAQ McClellan oscillator near its upper Bollinger Band. Once it reverses, which hasn't happened yet, it's a sell signal. Well, this has been my count. It's not the only count, but it's my favorite count. What's causing me to rethink it is the nature of this rally since Christmas. I said when I saw the target was over 2,800, I also said I thought it was impossible. Bear market rallies, if in fact this is the end of the bull and we're in a bear, don't usually last this long, 3 months plus. Don't usually have a golden cross of the 50 and 200 day moving averages. And after this amount of up move, tend to have a lot fewer stocks in favorable positions above their respective moving averages. We're now over 90%. So we have to consider the possibility that maybe this is just a consolidation in an ongoing bull market. Of all the possible counts, this is my favorite. Here's the end of wave 3. Here was A. Remember, this is a 1, 2, 3 wave structure. This A, B, C. C is a 5, but A and B are both 3s. This could be the end of A. This is a weekly chart. This was 5 waves down for A of smaller degree. And if this is ABC, this is one of the places where it could be the end of B, because C is 127.2% of A. Now, of course, that doesn't mean it has to end here. Could wind up being 150% of A, 168%, 200%, but at least if we reverse here, this gives a reasonable explanation of what's going on, and it's a more aesthetic picture than the count I had been using. Then this whole consolidation, if this holds, would correct 50% of this up move, and then after a drop here, that's why I think the intermediate term is somewhat tenuous, the long-term uptrend could continue. It's a plausible count because it doesn't break any rules. So for tomorrow, unless we gap up and take out this high, I look for lower prices. We have targets, but if we start to drop in spades, this high might hold for a bit before the bull continues. It's not the only way to count it, but it's a plausible one, and that's today's call.